This is Market Week Live, June 7th, 2024. Information and support for traders and investors. Welcome to everybody. People still coming into the room. Glad to see everybody that is here. And we have lots to bring you today. This is just the legal that we do. This says that everything that we bring to you is for entertainment and educational purposes. It's not investment advice. Everything we do on the website, oral or written presentation, anything in videos, or however you see the information that we put up, it's all about for you to use in discussions with investment advisors. And as you make investment decisions, we always tell you to consult your own trading plan and financial professionals before making trading decisions. Our host today, well, Katie can't be with us today, so the three of us are here. Steve Miller, that's me, known as Slim for the last 50 years. Matt Serpe, who's been with me for a couple of decades, and Arby for like a decade and a half. So we've been together for a long time. We're all experts in cycle analysis, and you can learn a lot more about us by going to askSlim.com, meet the team. We have some information and interviews up there that I think you will find incredibly interesting. If you want to contact us regarding membership issues, website issues, other things about the business, write to team at askSlim.com. You want to give us any questions about our content, information on education and analysis, first-time specials, and, of course, upgrades for our members, write to Matt at askSlim.com. Coming up in this show, I'm going to bring you my opening comments on the markets. We're all going to bring you a trade idea as we go through how we do our trade planning, and each analyst is going to share a trade idea, and you'll see our total approach to trade planning. Matt's going to bring you a review of our services. You're going to see the amazing depth of what we bring, and he's going to go over our MCM, which you get with our new level 4 special, and this is just an amazing app. So he's going to show that to you. We'll have our express round Q&A with the askSlim team. Katie's name is there, but she won't be answering anything today. This is for level 1 to 4 members, so you can add your questions right now to the Q&A. The floor will be yours, and then we will answer the questions that we can. You have any other questions on trade planning, on our chart analysis, on trading issues that you might have, then I'll be glad, or the team will be glad to answer those for you the best we can. Then I'm going to bring you stock market analysis. We're going to look at the S&P 500, NASDAQ, and we're also on our level 4 multiple time frame analysis, charts, and I'll bring you analysis, including our proprietary indicators, and you will see the MCM, our market condition monitor, at work. You can watch the show. Well, if you're a premium member, we're going to send you a link and you can then participate. So those of you that are now watching on YouTube, well, you're a free member or a non-member, and you can become part of the group that asks us questions by going to our website, become a level 1 through 4 member, and we will be glad to then include you and send you the link to participate in these shows, which we do Market Week Live twice a month usually. So it's a great opportunity to ask us some questions. Those of you that are brand new, a free member or non-member, well, welcome to you. If you want to get acquainted with our site, a great way to do that is become a level 1 member. You get 3 months of our daily information for just $45. That's $15 a month, which is just amazing for the information you get. That includes a great app, a momentum tracker. So if you're a position trader, longer term holder, it's going to include that for you. And it's just, you'll be astounded at how good that is for longer term holdings. On YouTube, make sure you subscribe to this channel, click the notification bell, like the video, give us a thumbs up, and on X, follow me at askSlim. Any questions, again, that you have on anything we present on our memberships or huge offerings of education and analysis, write to Matt at askSlim.com. All right, so this is my opening commentary on the market. The stock market continued to move up this week. It's pretty choppy here on Friday. The market had this move following last Friday's huge reversal. If you remember, it was down a lot and then rallied all the way back up and got to the plus side. And there was a massive last hour buying panic to end the month. That happens sometimes at the end of the month. And then the market was really strong most of this week. So it did continue. Stocks on Tuesday got help from a big jump in the bond market as yields fell very sharply as economic data came in really weak. And we saw that in the manufacturing PMI that came in at 48.7, which says that there's a contraction in manufacturing going on here in the US. And of course, that excites people because that means that there's motivation for the Fed to cut rates, and rates did get cut. But the market did it, not the Fed, as we saw strength in the bond market. On Wednesday, we saw ADP numbers come out, and they were weaker than estimates, and that had people believing that the numbers were going to be weak for today. That actually didn't happen on Friday, but we also saw the Bank of Canada cut rates by 0.25%. They're the third major bank to do that. NVIDIA surged on the upside on Wednesday, and the S&P 500 on that weaker data and on the NVIDIA move gained over 60 points. The NASDAQ up about 220. So that was a really strong day on Wednesday. Thursday, the market stalled. NVIDIA was up 40 points or so early. It fell quickly to minus 30 or more. News came out that the government had announced it's going to do an antitrust probe on the AI giants. And that got the techs and AI moving down again. NVIDIA did stabilize, but on the downside, it's doing the same thing here on Friday. And of course, after the close today or on Monday morning pre-opening, there's that 10-for-1 split in NVIDIA that everybody is waiting for. Friday, the employment numbers came out. They were much stronger than expected, 272,000 versus like 150 expected. Unemployment rate moved up, though, to 4%. First time we've seen that number in many, many months. But wages, they were up 0.4%, and that bothered the market because that's inflation. So we're seeing just this really a cross-ruff of news coming back and forth: weakness, strength, inflationary, non-inflationary. The markets don't really know what to do with that, except that buyers are clearly still around. We saw the indexes move sharply lower on that news here today on Friday, and then come all the way back up to the plus side, sold off again to the minus side, and now here at midday moving to the plus side again. But this is all happening today on Friday with the bond market getting slammed to the downside, and some of the other risk-on type assets are getting hammered, especially gold and silver. News came out today that China is pausing their purchases of gold, so gold and silver, the metals, are very weak here today. For the stock market, it's following our analysis actually quite well. However, as we look at all-time highs in the market, there's a disturbance in the force. And I say that because the rally is narrow and top-heavy. As I suggested in recent weeks, to continue on the upside, the breadth would have to expand. We're going to have to see the AI stocks, tech stocks, not carrying the ball for every single upside move, but other things starting to move up. Well, we're really seeing the opposite going on right now. As techs have been still leading on the upside, small caps and mid caps are very weak. And I'll show you that a little later in the show when we look at those charts. And with the economy slowing, as many of the indicators are showing, that has energy demand dropping. We're seeing energy's pretty weak in the energy sector, one of the weaker sectors in the markets, and that is bringing lower rates, at least in the Treasury market. And when you look at all of that, potential slowing of the economy, lower rates, which affects bank earnings in a negative way, there's certainly reasons to believe that overall earnings may have seen their best growth for quite a while. With all of that I'm looking at, and especially this deterioration in the small and mid caps and the failure of breadth to to emerge here, better breath to lift the market, it is time to start warning about things again. While most of our analysis is still pointing to the upside, and for the S&P 500, we've had at least a 5,400 target on the upside. There's still some upside available, we certainly want to say, but I think it's limited, and it is time to start looking at things that are beginning to deteriorate. Stocks for the week, well, they're widely mixed, really. S&P 500, NASDAQ up pretty good, 1 to 2%, though the Russell is down about 1%. The Dow is maybe unchanged to tiny gains on the week. It's all moving around pretty quickly. The bond market, really volatile. 30s up about 1.25 points. The 10-year yield's down about 9 basis points. And overall, I think, despite the fact that rates popped today, that the bond market fell hard on those employment numbers, I still think that interest rates are going down and the bond market is going up. Gold for the week, just huge volatility here, as it has a pretty big failure, and silver getting slammed today. So gold down, I can't keep track of it, over $20 on the week after being way up. And the silver market, the same, down over $1, and other big and other metals that we look at, all looking pretty weak. Again, that was on China pausing the buying, they say. I honestly don't believe that's going to be anything but just a temporary way that they manipulate the market. Maybe they'll be able to buy some cheaper, but I think they're going to be back in there, and all the other countries that want to do everything they can to take control away from the dollar, I think they'll be back in there buying gold before you even know it. So maybe it's a month away, something like that. And overall, I think long-term metals are in good shape, but for the intermediate term, short-term and intermediate term, I think there's more as far as a pullback goes. Oil market loses over $1. It was a lot worse. It made a low of about 72.5. That's down near our target, and then rebounded pretty significantly. But I think that the oil market is going back to the downside in a significant way. And coming up in just a few minutes, when we look at our trade planning, you're going to see my analysis, and I'm going to look even at the monthly chart. And I think you're going to find that really interesting. So that's my opening comments for this week. This is trade planning with the askSlim team. We take you from our analysis to the trade idea. I'm going to look at short term, but actually looking at intermediate and long term. On the light crude market, though the trade I'm looking at really is short term. Ari's going to look at MGM, and Matt is going to look at TLT on the bond market, and he's looking at a long in there in the bond market. And like I just said, I kind of think that the bond market is going to do okay moving forward. I'm going to move into my charts here on light crude, and this is the weekly and daily chart on the light crude market. And you can see that it's been really, really weak and getting a rebound now. So what am I looking at here? Let me just get these pointers up here. On the weekly chart over here, you can see here, this is where momentum went negative. I have it listed right over there. Here's where momentum went positive right over there. And the same thing happened right over here. Now, what is that? That is our reversal scout. That is one of the best ways to understand momentum, using that level 4 proprietary indicator. And you can see in here, it is still negative momentum. Once it turned negative here, it warned us that this cycle had turned down. I'm going to blow this up a little bit more for you to see, and I'm going to go out a little bit further, and you could see these cyclical rhythms that are in there. They're right over here. We're looking at the cycles in heating oil and in gasoline, and they line up really perfectly with the light crude market. And let's just look now at these last 2 cycles right there again. And this is where it's moving down. And we have a note in here that our daily trough, in other words, the decline that the the market is on the short term showing us is likely to bottom either late June or somewhere early July. So we're looking for lower prices in here. Now you can see it got good support here in the rebound in the 72.5 area. It's pretty likely it's going to come down and test that again. So this rebound in here, I believe, is false. So when I look here at the daily chart right here, I'm looking at what looks like a likely decline right now. And usually, when you get this rebound right over here after the sharp break, now I want you to see that this is where the cycle low is. And I wasn't really sure which of these were the trough, in other words, the low of this cycle period right here. And then we got the rally in here, and it looked pretty clear that it was right over here. Could have been right here. I still don't know, and it doesn't matter. Once it gets underneath this level, it's negative, and you can see it accelerated to the downside. Now, resistances are way up over here, and that's for this big decline there. That's not that important right now. Often what happens is that the slim ribbon, as you can see right in here, and this is a free indicator that you can put up on the Thinkorswim platform or Wealth 365 charts or Trading View, Tasty Trade, all of those have it. And if you want to put it up on your Thinkorswim, you can get the script from us, just write to us and we'll be able to give you that information. This is when it comes up, usually it comes down to the level, comes up to the level where it broke down from, which is in this case right in the slim ribbon. See how the slim ribbon gives support right in here, and you can see how the slim ribbon gave resistance right here. Also on the bottom is the slim ribbon PO. This is a level 4 indicator. And you can see where it gives you these upside arrows that says resumption to the upside. In other words, momentum is strong and likely to continue to the upside. Here you could see in here momentum negative and likely to continue to the downside. So once it gets up over here past the 25 level and then turns down, it'll give you another down arrow. So my trade setup right in here is to be a seller somewhere up in here. You can see where it gets, where there's a resistance on this a megaphone type formation. It gets back up to that downtrend line or to this level here. So somewhere in this high 75s to high 76s is kind of my favorable entry zone right in there. That where it looks like it should be moving down again, and then testing 72 with a chance of getting down here at 68, that next weekly support down over there. So that's a look at the weekly and daily, and this is very negative momentum here on the daily, negative momentum here on the weekly. But now what I want to do is give you a little taste of, well, the monthly charts. This is the monthly, and this is just absolutely amazing. And for those of you that are members, I'm going to do a big picture update early in July. Where I look at all the monthly charts also on the major indexes. So you'll be able to see how I do a longer term perspective. So you can see in here that you have this average length of each cycle is around 18 months. And when you get into the late stages is where you get the big declines. Here you had a super bullish cycle where it only left a month or two to correct. You can see there, and then it continued to move to the upside. Now, because this came down right over here and tested that low, it said that the next rally was likely to fail in resistance. You can see that it did that. This was the 7th month right over here off of this low. So it meant that getting down here, testing the 78.6%, the next rally would likely fail in resistance, which it did. And then it leaves several months here on the downside. So this coming up here is a pretty risky period. This comes out here in towards November, potentially out to year end, where we're likely to see weakness in the energy market. So that says to me that there's a lot of risk out there. We're getting into, see here, the final 3 months, right there, the final couple of months. And this was just weak for a long period of time. Momentum in here turning down again after trying to get to the upside. And that says to me that the light crude market is likely to move to the downside. Now, there's been some background news in here where they're backing off some of the production cuts from OPEC Plus. and also world economies slowing down, U.S. economy likely slowing down, talk about demand pulling back for the energy market. So there's a lot of reasons why, and I kind of talk about that. What's the background that would cause a kind of big decline? This really looks to me like it's headed, well, under that 72 level right over there seems like a layup, as you can see, and then potentially down to this level, 67, cycle low level, 63, 63, and then these supports are in the low 60s and mid 50s. So there is a very risky period ahead for the energy market. And my guess would be that that's reflective of a pretty weak situation for world economies and the likelihood that you're going to see some sizable moves to the downside in all the energy markets as we see in here. And now with breakdowns going on or weakness coming in a similar time period for the metals markets, it just makes me wonder if commodities are not going to have a temporary pullback for some months before we really start to get a stronger period for the commodity markets on the upside. So this is a pretty negative picture. Again, my entry level is in the mid 75s to high 76s for the short-term trade on the short side right over here, as you see on the daily chart. Momentum negative right over here on the weekly, and what looks to me like a very negative condition as we look at the monthly chart. And again, don't forget, monthly charts, I'll be doing all the major indexes at the beginning of the year. So make sure that you become a premium member to be able to see that video. I'm going to turn this over to RV.
All right. Thank you, Slim. Great job on CL. Let's go ahead and share our screen and we'll take a look at this MGM intermediate term long that we're looking at here. All right, so you should see the weekly and daily cycle analysis for MGM. Let's pull up the weekly chart. And what's interesting about MGM, again, we've had a solid move up in the overall market. Generally, once you form highs, you'll see a move towards some of the laggards as you see, you know, an overall search for a little bit of alpha. And that's really what I have been looking for a lot for our trade ideas, is looking for names that have not yet moved that are likely to get a little bit of a pop. And this is, in my view, one of those names in MGM, due to the fact that there is a low here that is due based on our cycle timing window, and that's 4.8 to right around 6.10. We're going to be watching for a pop back to the upside into this zone right around 43.25 to 44.5 or so. That's what we'll be looking for. We are currently hovering right around 40.31 as of the time of this video. We're holding above that 78.6 fib at 37.04, so that is key for it to hold above that level. Let me just show you the daily time frame. And what I was looking for is a hold in this zone, 39.67 to 39, which we have, so far done here. If it loses the minor 78.6 fib at 38.64, that would render this idea not valid. So you can see that risk would be right around 107, so quite nominal. And I'm looking for a move, as we said, over the intermediate term, which is over a 3 to 8 week time period, up into this 50 to this 61.8, 43.14 to 44.34. Okay, so if this is going to work, I obviously don't want to have a lot of risk on. I want to see a move up, and first to see a basing cycle form here with a higher cycle low that would form versus this old low. That next short-term trough is due 628 to 715. So look for a higher low to form, and then for a surge into that 50 to the 61.8 fib zone, likely into the summer. So that's what I'll be looking at here in MGM. Again, first thing we have to see is for a higher low base to form into this early part of July time period, and then that would set up that next move up towards our targets. Okay, so this is the intermediate term long look here in MGM, and I'm going to hand this off to you, Matt.
All right, great work, RV and Slim. Okay, I'll share my screen. Up on my screen, we should see the weekly chart for TLT. Slim mentioned that's the one I'm going to review. So this has been in a multi-year downtrend, actually. As you can tell, it's made a series of lower lows and lower highs over the past several years. However, there's something that could be changing here that we want to zoom in on. So what I'm going to do is zoom in here, and we'll take a look at the most recent cycle price action here. Okay, so we can see that there was a major low that formed in October. And the progress that was made in this rising phase here in this next cycle, and this major cycle here, which is made up of three minor cycles. And then there's also a ghosted cycle that remains having an influence on the overall price action. So when this major low formed, this rising phase here that occurred in the dominant cycle was significant enough where it actually came through the minor intermediate 78.6. So there was a minor cycle here. And if we do a fib draw from the peak of that minor cycle down to that trough, you can see that this rising phase here did surpass that 78.6. So that's a meaningful move on that rising phase. Now, there was a decline that occurred during this first minor cycle here that got pretty deep. However, it did not violate that 78.6. And now in this next rising phase that we're in this minor cycle, and I'm going to remove this other fib draw here, you can see that the reversal scout has turned up. So that's confirming that that low is in place. And we have a sense that we have some positive price action occurring within this overall dominant cycle. And now what I'm going to do is I'm going to pull over the multiple time frame view here, looking at the weekly and the daily chart. And part of the reason I picked TLT is because I wanted to show how the askSlim methodology can really be used to decode very complex price patterns and make sense of them for trade planning purposes. So this has been, as I said, in a long-term downtrend. However, there's some opportunity here, and if you really zoom in on it, you can use our methodology to decode that for trade planning purposes. So as we go through some of the evidence, what are we looking at right now? If I look at the daily chart here over on the right side, this cycle is going to translate positively. So it's going to finish where the peak of the cycle is very extended on the right-hand side. So that's a positive indication. So really it's this daily chart that is driving the daily chart, as well as this minor cycle, the minor cycles that are driving this bias that I have to the upside right now. So what we have is a low due in the daily chart, which is syncing up potentially with another pullback here in this ghosted minor cycle. So either the ghosted minor has made a low, an early low, and we should get a subdue pullback here, a shallow pullback in the short-term support zones, which then would set up this next rising phase in both the minor on the weekly on this ghosted, which would still be within the confines of a peaking phase on the blue dashed minor, and then also within the confines of the major peaking phase here. So all of those cycles are setting up for a potential new advance, and this is led by the major cue here, or clue, would be the daily cycle in terms of its translation. Also the fact that the reversal scout slim ribbon are both positive at this time, as well as the weekly reversal scout. So what I'm looking for here again is the potential for a shallow pullback that we could see over the next few days to week, unless we make an early low here. And then once we complete that there would be an advance that takes place, getting up into this first projection, which is around the minor intermediate 61.8, around 95.35. And if we can get through the short-term 78.6, that would then open up the door to a move up into this next projection. So I've indicated here needs to push through that 94.45 area, this short-term 78.6 up here, and that would open up the door to that next move into the minor intermediate 78.6 to the 61.8 fib extension. And I wanted to just show how we can find those fib levels. So if I do a draw from this swing high to the trough over here, you can see that lines up essentially with this minor 78.6. So this is a key level up here. And then also on the short-term cycle, this level here, that 78.6 is important. So we're looking for those to be in play. And that first short-term 78.6 is an important one to push through to open up that door to the next level of projection. And we'll know that we're wrong pretty quickly if we continue this pullback and we violate the minor 78.6, which is the revaluation level. And that would then negate this overall analysis in terms of a bullish upside and require, again, reevaluation and negate the overall trade idea. That is the look at TLT. Back to you, Slim.
All right, super work by the whole team. Just really enjoyed the detail, Matt, that you put in that one. And I hope that any members that may have questions about that will certainly touch base with you, because that was extremely detailed. And I think we all have some really interesting things that we just shared. So hopefully this will prove to be a great educational lesson for the members. All right, so we're going to move on here. We're going to get to where Matt is going to hold the floor here and bring you some information on our services. Matt, take it away and show them this great special we have too.
All right, will do. Okay, I'm just going to share my screen again here. Yep, as Slim mentioned, I'm going to do a quick review here of our services. For those of you that don't know, askSlim is a technical analysis services and education firm. We provide trade planning tools and education for various trading styles. And we even have a separate service for day traders. So that is something that was recently launched in the last few months, and we continue to make enhancements and upgrades to it. So we do have 5 premium membership levels, and really they start with an introduction to our methodology. And then what happens is the further you go in our membership plans through the all-in level 4 is really the expansion of our technical coverage and the scope of the symbols that we cover, and then also the tools, the cutting edge trade planning tools that are available to you as you go further in the memberships. So today I'm going to focus primarily on the all-in level 4 membership, which is our top tier membership, which Slim has mentioned we've been running a special on, and that is in its final week. So this is the final week for that special. It is a significant discount. Typically it's $159 a month, and we're doing a 1-month trial only for $99, and it's non-recurring. So this is a unique opportunity to take advantage of what we have available in level 4. And specifically, there are 3 distinct advantages to level 4. Number 1 is you get everything that we have in all of our membership levels. So if I go to our dashboard here for level 4, it's going to encompass everything that we have in levels 1, 2, 3 as well. And there is a lot of information. There's a lot of content, a lot of products, a lot of services. However, it's the theme throughout all the services that we offer is what we just covered, and that is that we want to provide you insights into the be able to project in time, price, and direction. So ultimately, you can fulfill answering those key trade planning questions that we talk about in these segments. What's my outlook period? What's my directional bias? Of understanding your directional bias is so critical, and using cycle analysis really gives you a framework, as well as our momentum analysis and swing high, swing low analysis, to be able to fulfill answering these trade planning questions. So again, level 4 gives you access to all of that. And recently I've done several very comprehensive webinars going through the features and benefits of level 4, made those available to all of our members and free members. If you have not had a chance to see those and you'd like to sign up to view it as whether it's a free member or take advantage of that special, you can take advantage of that special on the homepage. But you can also write to me if you want to review those. Also, I wanted to focus in on our market conditions monitor, and we are releasing a pro version of this service come next Tuesday. It will be ready to go and available for download. There's a new feature set that's coming with it. Right now, our premium version of the Market Conditions Monitor is available. And this carries our proprietary set of momentum indicators. So our Reversal Scout and Slim Ribbon. And we have a relationship, a business relationship with the CBOE and bar charts that supply us with real-time data. It's running in the background. And on the front end, what you get to do as a member is you can sort through all the symbols that we have available. And there's over 115 symbols in the Market Conditions Monitor. And you can select the trader type. I'm going to focus in on this view. So we have a trader view and we have a time frames view. I'm going to focus in on the trader view because I just talked about one of the key questions you have to answer for yourself, or a couple of the key questions, is what's my outlook period? What's my directional bias? And this Market Conditions Monitor can really expedite your process to help you find trade ideas, or, which I'll show you in a minute, be alerted when something is changing. So we want to be alerted when something is changing, whether we have a position on, and we want to know that maybe the momentum is shifting and it'll force us to reevaluate, or momentum is moving in a direction that we were waiting for relative to a trade idea that we were planning for. And so our new Market Conditions Monitor Pro version, and I'll show you here just in a second, has an application, a desktop application that was custom built by us that syncs up with the Market Conditions Monitor so that you can set alerts for yourself when conditions are changing in those symbols that you have an interest in. So at a high level, the Market Conditions Monitor uses Reversal Scout, uses Slim Ribbon. We do this at multiple time frames. We have an algorithm in the background that is checking over 10,000 variables basically every minute, identifying when these changes are occurring. And then it is sorting, which you can do based on those conditions. So if I want to sort by obviously alphabetically, or if I want to go to what are the most bullish symbols in this specific time frame, that's how they'll be populated. So you can see XLC at 11:30 a.m. Central Standard Time. There was a shift likely in the 15-minute Reversal Scout or Slim Ribbon, and made this one the most recent symbol that had changed. So it's a great way for you to identify symbols that may be of interest for your portfolio as you want to check for momentum conditions. And then also, like I said, if you do have a position on and you want to be tracking it for changes. So I'm going to now show you the new app that we have. So it'll be available to you to be downloaded. It takes only like a minute to go through the download process. And then it sets up just like any other desktop app right on your PC or on your Mac or iOS desktop. And then as I said, it syncs with the Market Conditions Monitor. So this is the app itself. You can create alerts right from the app, or you can do it right from the MCM. So let's just talk about TLT for a second, since I did a trade ID on that one. And I'm going to pull up near-term condition right now is neutral. So one of the key questions that we talk about for trade planning is, well, obviously I want to know what my bias is, but I also want to know what signals are needed after I've gone through my process. What are the signals that are needed so that the trade setup is a go? Well, if I want to be alerted when TLT is going to shift from, let's say, neutral to slightly positive or bullish, slightly bullish or bullish, I can do that. I can set those alerts. And then what'll happen is over on my desktop app, I can sync it. I'll sync it up. And then you'll see here now TLT has a number of alerts that I've set intraday and also near term that will alert me when those conditions are changing. My process then would be to go back to my charts. And this is a chart that we provide to all of our level 4 members. We call this our raw chart streams chart. We update several symbols a day that you have full access to, and then you have access to the raw grid where you can plug in any symbol of your choice. So again, as a level 4 member, you have access to these trade planning setup grids, and then you can combine that information with the MCM, and that gives you an extremely comprehensive view, right? Where you have a lot of information, the pertinent information you need to help with those decision-making process. So with TLT right now, you can see the Reversal Scout has rolled over negative. You can see on the 15-minute that both of the indicators are negative. However, on the daily chart, you can see that the indicators are positive. On the weekly, they're positive here. There was very good strength in this last rally in the minor cycle, and the SMI is reflecting that the power of that move. But right now, I don't, as a momentum trader, I don't have a signal that would suggest to me that it's time for that trade, and that's why the MCM can be very helpful with that, where I can set an alert for myself, and then I'll get a desktop notification when that comes through. Another example here might be, let's say we're watching for a shift in the indexes, excuse me. And many times we use our reversal scout and our slim ribbon to assist with that process of getting a sense of when there's a peak that is pending or forming. So what I can do again is I can grab my MCM and I can go over to the SPY, and I would stay in this near term right now. And what I would do is I would set a notification for myself when this would go to either neutral or even slightly bearish. And then I'll get an alert when that happens, and then I can jump to my charts and I can verify the conditions I'm seeing, and that can help me with my decision-making process. So there's many ways, very relevant ways that you can utilize the MCM and the new application to assist with your trade planning process at multiple time frames, and everywhere from intraday to intermediate. And again, I have held several webinars around level 4 as well as the MCM, and just completed one yesterday. It was about an hour and a half long, and I'll be sending that out later today or tomorrow morning. Okay, that's the review I wanted to do on our services, and very specifically with level 4. Again, if you have an interest in that, you can go to the homepage at askSlim, and you can click on the Learn More to then get yourself set up for this trial that is ending in a week.
All right, super job on that. Yes, everybody now, if you're not a member, go now to the top of our website, click that Learn More, and you'll be able to read about all that information. So that Matt is showing you right now. Great job on that.
All right, thank you.
All right, we're moving into the Q&A. Interestingly, we don't have many questions for today. This will be a last call if anybody has any questions on your trading, on strategic approaches, on our analysis, any question you might have. We'll let a couple more go up there, and then we will close it up. One question that I want to answer that I saw just a few minutes ago come up is regarding the light crude analysis that I have shown. And that was analysis that said that the market is likely to move back to the downside. And the question is that let me read it exactly. It says, would it be safe to say that when a light crude breaks the 2-hour 21 EMA, it can be a sell setup for either the 7 DTE or the 45 DTE in a large size portion? I'm just looking for a feel. Interesting. That was from Lay, I think it's Lay or Lee. That's a lot more than a feel than what you're asking for right now. So actually, you referred to the 2-hour chart, and I'm going to bring that in right over here. And this is a interesting chart because it's a 2-hour light crude, but I have the daily overlaid on it. So you can see the daily chart, that daily analysis I have shown, and also now in a 2-hour time frame. I've also put in here the resistant zones that I had discussed about, which were really from the mid 70s or so up into the level as high as maybe even 77 up here. This is an important level right there. That's the 78.6. So if it got over that level of 78.50, then I would start to say that something was different going on. So right now it's moving into the sell zone right over here. You referred to the 21 EMA, which is the bottom of the slim ribbon right over here. While that may be a signal, I don't know exactly that that will be a signal. I tend to want to do some selling into this area right here. You see the 2-hour slim ribbon PO is already given a signal that this is likely to start moving down again. So that's already giving me warnings and having rebounded into this area. I'm just looking for it to turn around and move down. I don't really use the 21 EMA as you're describing. Now, another thing that I want to say in reference to your question is that you said large size portion. We never do recommend large size. We recommend that you have a specific size that you trade based on your own personal risk management guidelines. And that no trade should be outside of those right there. If you think that this trade that's setting up is going to be one that fits the criteria for a full size trade based on your own risk management, then I would say that makes sense. 7-day, 45-day days to expiration. I don't know. Again, that has to fit into your own style. So this is just another example of a reason why I'm negative and that it's into this area where I think it is likely to reverse from and then move again to the downside. So that's a look at that 2-hour light crude. And I hope that at least gives you some information as far as that goes. I'm looking for anything for me on the commodity side, and then I'm going to turn this over to RV and then let's see, there's a couple more I can answer right in here. Let's see. All right, so I don't really have any other futures, so we're going to cut off all the questions right now. I will answer just a couple in general right here. The one question is, why don't you have charts on YM daily as you do in NQ? Well, we're kind of, you know, with the Dow Jones Industrial Average, very, very much redundant as far as how it trades with the other indexes, and the fact that we do have a capacity, even though we have 4 analysts, we just can't include everything. We do include the DIA in our analysis as far as our apps go, the MCM and the momentum tracker, that's all built into that. So we just don't do the weekly and daily charts on a regular basis. Level 4+ members can make the request if they're interested in getting those charts. So we do have a limitation on how many charts we can handle. So we leave the Dow out as far as that goes. We have DJV is asking me, he says, hey, Slimmy, most of the people, many of the people that know me from way back on the Tasty Trade days call me Slimmy because Tom and Scott and Tony and all those called me that. So it says, hey, Slimmy, how do you balance your spidey sense about the weak breath with the fact that momentum is positive on all time frames in the cash markets? So this is, after 50 years of looking at markets, I do tend to be looking for things that could be cueing me into something changing. And that is what I'm seeing now when I'm looking for I'm looking at a very top heavy market. In other words, the breadth is very narrow and it's being driven by very, very few stocks. And when that happens, if the market's going to continue moving to the upside, it's likely going to happen because of a breadth expansion. Well, we're seeing the opposite of that now, as it's getting even narrower. And now I'm seeing breakdowns in a chart like the Russell, which I'm going to show in just a few minutes. And that's where it really comes from. It's really not only gut feel, but it's a really significant technical reason to be suspicious of the stock market here and to say that the upside in it is limited. So that's the look at at my gut feel and where that comes in. And sometimes I say when it's an instinctive thing I'm feeling, I will share that and say, well, maybe the charts don't support it and it's instinctive. At this point, the charts do support it. Now, I'll show you that in a couple of minutes. I have a question here about the gold and silver market. So I'm going to put that up now. That's light crude. I'm going to switch over to /GC. And we'll have the weekly on the left. We have the daily on the right. So what's happening here on the weekly chart is that this is all looking like a top to me right over there. You have the you had a price level here where you had that shooting star right there. I'm just going to duplicate that. And then you had this a bearish engulfing pattern right over here on the weekly chart. And look at the momentum. Now, I let my members know that this was a significant problem as momentum was turning down, as you see right in here. So we have indications of an intermediate top going on. When I look at the cycle patterns, the rhythms in the market, well, this line right over here is silver. And this blue one right over here, blue cycle bracket, is the gold market. Now, the gold had a cycle right in here, as you can see, and then another one right in here. So this was the trough here. This was the trough right there. They don't have to exactly line up. It's just we're getting the sense for the energies in the market. This said you were going to move to a new high, as you see, because this was translated in a very positive way, and you got the new high, 24.54. Then you came down here in a very significant way. And when I show you the daily chart, you'll see that it's telling me of a problem. So momentum negative here in the gold market. When I look here at the daily chart, now that yellow zone right over there is where it warns you that there is a potential corrective period. So this right over here, the ideal low is early July, right over there. This pattern in here where you have this bullish cycle, this is where you made the double top. It comes down, rallies, hits resistance, and takes out that low. That is a breakdown. That says prices are going lower. So what are my projections? Well, the very least, or the best case, is testing this 2307 area right there on that cycle low. It got down under that cycle low support, which is that breakdown right there. So it's reasonable to be projecting here at this intermediate support at 2212. That looks to me like where this risky period could get it down to. I'm going to go back over here to the daily chart. There's some support right over here at that 2306 area. This is 2310 right over there. But then here's that next level right over here at 2212. Now, this is way out into August. So if that says August is the time frame, I go back to the daily chart. I can look at that next cycle, and that takes you out into August. So I can project, looking at this, that there's a period of weakness here, and then there's likely to be a rally period right in here, setting up a sell into that area and then down again into August. So this looks like it's going to be another whole harmonic family of cycles, which moves to the downside. The gold market looking like it is peaked on an intermediate basis and likely to move down. I will give my long-term projections on the gold market in about a month in July when I do the bigger picture. But right now, this looks like choppy market to the downside, negative bias. Believe me, I'm really, really long the gold and gold miners in here. So I'll probably be looking for an uptick now that I see this to lighten up on the gold miners and then have a better opportunity to add to them again out in that August timeframe. And this is a look to me like the gold market has problems, at least on an intermediate basis for coming months in here out into August. When I look at the silver, well, this is the silver cycle goes out into actually September on the weekly chart, but it's I'm just going to look at the side by side in here for you to see, and that is this cycle right over here bottomed, tested, and then came down again and now broke the support. So this is very similar. This looks like a move down in here to 2733. And that would then be a likely setting up another rally out over here, which would be a sell. And you can see the gold and silver cycles are kind of running very close to each other. And then that next cycle out there, which takes you out into late August or early September. So that says that the gold and silver market are in an intermediate corrective period. The momentum here has not turned down yet. When you look at that, the momentum in here is choppy, but it hasn't turned down yet in silver. So silver is maybe a little bit stronger than the gold market, but overall, I would say both of them in a significant corrective period for gold and silver. I think that's everything for me. David says, I hope your estimates for the S&P 500 for the rest of 2025. He wants to hear that. Again, early July is when I'm going to bring that to you. And now I'm going to turn this over to Arvi.
All right, Slim, thanks so much. Let's go ahead and take a look at a couple of symbols here. First one we're going to look at is SMCIs. Let's share our screen first. Okay, so this is the weekly and daily cycle analysis for super microcomputer. And what we have here on the intermediate term are two out of phase money flow patterns. Keep in mind at the bottom, we have the cycle brackets. As we say all the time, they're there to help us to visualize the money flow patterns. You can see the rising phases, the peak, and then the corrective phases, the rising phase, the peak, and the corrective phase. And here you can see we had a rising phase, but we are getting an early test of our key line in the sand, which is the 78.6 at around 735.5. A loss of that level on a weekly basis would raise the odds that you're seeing an intermediate term peak in SMCI, but only a loss of our key cycle low support at 671 would get a confirmed peak. So we are not quite there yet, but this is a warning sign for now in SMCI. We are still looking for a pop, but again, we are not seeing any kind of obvious strength through our 61.8 fib at right on 1012. So that's a bit of a warning here. Not a great pattern. And as we all know, this has had just a monster run, not unreasonable for it to go into a consolidation. Jump over to the daily chart. What we have here in SMCI, and the reason we think it is likely that it is going to get a pop in the short term is that there's a daily low due, 524 to 67. We'll be watching for it to hold above this key 78.6 around 728.75 and get a pop back towards the 61.8 on the short term, right on 884, and a 78.6 at 922.86. Now, what would turn this positive is if we can move back through that old high at 972.31, because you would be looking at a higher low basing cycle here, and then a positive cycle if we are able to move through that old swing high in this next rising phase. So that would turn this back to the upside. But absent of that, again, this is really a neutral look here on both the intermediate term and short term. If we jump over to the other one that we will look at FVRR. I think this is called Fiverr. I'm not totally sure. If we pull up the intermediate term pattern here, you'll see that this has had just a large blow off top, and we have basically been trading in a very tight range for what feels like years here. We had a bottom that formed here back in early part of April. We are turning back up right now, given where we are in this intermediate term cycle pattern. This does still look like a tight flag that is forming on the intermediate term. You can see we are holding inside of this range. This is a 4-bar or a 4-week trading range. We're going to be looking for one more test back out of this on the upside towards that 78.6 at 28.82. We still have a series of lower cycle highs and lower cycle lows. So what would, again, need to turn this positive is you have to use up more of this dominant cycle rallying in order to raise the odds that you are seeing a base. That next trough, we get our pointer out here, that next trough is only due towards the later part of the fall here in FVRR. So this really has a lot of work to do to change that longer term downtrend, but for now it's in okay shape on the intermediate term, as long as we're holding above that 61.8 at 21.82. If you jump over to the daily chart, this is where it gets really quite interesting in that there is a daily low due, 614 to right around 72. We'll be watching to see if it can hold this zone here, 2406 to 2246. If so, we would be looking for a move back through that old high in the short term versus 2649 in that next short-term rising phase. Because right now, this is looking like a higher low basing cycle. Given where we are on the intermediate term pattern, it would favor another test back over recent swing highs in that next rising mode. Okay, so that's the look there at FVRR, and that's all we have in terms of questions, Slim.
All right, great. we're going to move on here. That was interesting, just a few questions in here, and we got a pretty good crowd. So make sure next time you come, if you want to participate, that you become a level 1 to 4 member and ask us the questions that you are interested in. All right, stock market analysis, projections, important information for you to consider before using our information. Please do read this slide. Talks about our approach to the market and how you then could use the information that we provide, and always want to stress trade ownership. No matter what we say, no matter what anybody says, it's important that you make every trade your own. All right, stock market, multiple time frame analysis, and that is what we do. We do that so that we have the information that we can then use for projections in time and price, and of course, direction being up or down. So that's what our analysis is made up of, the ability to use multiple indicators, and our cycle analysis, which is essentially repeating action as far as waves of money flow, money coming into the market, money coming out of the market. And we use all of that, I would say, complex information to come up with our projections. I'll show you proprietary indicators and also look at the MCM as we look at this. I think that what's going on right now, as I said in the beginning of the show, is really interesting because we have a very narrowing breadth condition in the market, and even today, as the market is moving up, we have declines right now are about 750 advances to about 1,900 declines. This is not the kind of market that has the ability to hold, to keep its upward momentum. To do that, you need to have an expansion into the out of the mega caps, essentially, or where they kind of hold, and then into the lower cap, mid cap, lower cap stocks. We are not seeing that. We're not seeing good breadth. And today, as the market's moving up, this could all be about people buying ahead of the 10-for-1 split for NVIDIA. I don't really know how to explain the breadth being this negative and the indexes being up as we're seeing right now. But I think that we're going to either have to see something change significantly and reverse the problems I see in the market forming here, or the stock market overall is going to start moving lower. Let's take a look now as we look at our proprietary charts. What you see here is how our members get our level 4 charts. Excuse me. We're looking at SPX, NASDAQ, and the Russell. So all I do is I have to blow up the S&P 500 chart. And then there's arrows up on the top here that I can advance through all of our charts just by clicking on those, which gives you a good sense of how easy it is to really use this. Now, the market's moving up as we anticipated, as we are in this period of strength. We thought the period of strength was June, July, potentially into August, June, July. As we got the earlier upturn here than we expected, you could see it's on the left side of the ideal trough in here. Then we started to get indications that low was made, and then we, of course, turned positive and started to project to the upside. Upside projections were, number one, that we would get above that level right there because that's the highest probability. And then looking at where these fib extensions are, which is right here at 5,400. We got up to 5,370 today. And then these monthly extension right there, which is at around 5,450. This monthly extension's at around 5,560. So this whole area in here is an area filled with reasons to believe that, well, you have a target and you have resistance. Now, I make a note over here that when you get up into these levels, you have historic valuations, market cap to GDP, 200%. Maybe right now it's in the high 180s. And that would be the second highest ever in history before we had our last bear market. And valuations, it's just to speak to them a little bit more. At the high in 1999, before the dot bomb bust, the market cap to GDP was 157%. So we're at historic levels. This is all about the government, the Fed, creating a total bubble economy that we're in right now by all the deficit spending and the post pandemic actions. So there's a ton of risk here once this narrow upside leadership goes away. And we know that will happen at some point. Right now, we're going to maintain our upside projections that we see in here, which, you know, this is 5,400, this is 5,450, and somewhere up here into the mid 55s are all possibilities, unless we see the beginning of breakdowns. Now, I only see that now in the Russell so far, and that's what the first warning is to me. Let's look over here as now, again, the momentum in here is strong on the weekly chart. On the daily chart, well, we still have strong momentum. On the bottom here is the option bias study. Now, if you use that option bias study to bias your option positions, you will see that it keeps you in the right direction of the market. There was a correction in here that you can see where it turned red, but then turned yellow and then turned green again. We have this upward projection right in here. We call this the slim cloud. We create two channels in here, where the middle part of the channel is the highest probability move, and that was to take out the high right over here at 53.41, which we have easily done. And there's that weekly extension right up over there at around 5,400. So this, you could see, still moving up, and conditions of the first momentum thing I'll show you is the option bias study, which is a very unique study with multiple time frame conditions in there. Those inputs give you a great sense for when the market is in a particular trend and momentum that helps you bias your option position. So bullish, you can see this is positive, and this was updated this morning. On the weekend, I'm going to update it again because it's made a little higher prices. So these are slightly off from what our latest post is as far as where the supports go. So look here at the momentum. This is the slim ribbon shown in an area chart, and on the bottom, the slim ribbon PO. You get a good idea when the slim ribbon PO is in green and bullish condition. You get an up arrow. It says that the momentum is resuming to the upside. Here you had one to the downside when the market was correcting, and then it turned positive again and giving you those good positive indications. Again, the S&P 500 giving you positive readings, positive structures, everything is positive. This is the 2-hour chart in here, and on the bottom right over here is the market condition indicator that trades between minus 100 and plus 100. When it's in the swing zone, it gives you warnings between 25 and minus 25. Well, it hasn't been near that. And when it crosses it, it gives you a signal which is bullish or bearish. You'll see that in a moment, because the Russell has done that. So S&P 500, clearly, when we look at it, positive. Here's your NASDAQ pattern right in here, and you could see these positive cycles, bullish cycle, higher highs, higher troughs or lows, making the low a little bit late here, making the low a little bit early here, all of those very much in line. 34-week moving average often gets tested. It didn't quite get to it over here, as it didn't quite get to supports. And that's probably going to get tested way out over here somewhere. Right now, we're looking at rising momentum, positive momentum here on the weekly, coming up near that first target right over there, which is 19,175. Then you have 19,225, and then this one right over here at 19,730. So these are all the upside target resistance areas, and we have two projections in here, as we often do when it's positive, a positive one and a more positive one. So this all still looks positive in the NASDAQ. No reason to be afraid when you look at that. Here you could see it's moving up the top channel of the slim cloud right over there, which is what happens when it's looks pretty good. This came a little bit later than we expected. Here you could see the option bias indicator also positive right here. So that gives you a good indication that you should still be biasing your option positions in the indexes On the long side, here is momentum. You're getting the same thing as you saw on the S&P 500. Two upside resumption signals right over there, and the slim ribbon is built in here on the area chart. We do it this way on this because it screams at you the momentum conditions as they exist. So again, the NASDAQ is positive. Here you see on the market condition indicator on the bottom, that it is at 90. It hasn't been even close to that swing zone in a long time. And the slim ribbon here positive, as you see, the slim ribbon PO actually giving a 2-hour resumption signal here earlier today. So as the market remains strong, you can see this. So that's a look at the NASDAQ and the S&P 500 looking great, right? Now here is the Russell. This is giving a different story. Now, momentum in here is still positive on the weekly chart. And you can see the weekly chart in here. These harmonics are gorgeous when you look at that. Why do I say that? Well, you can see there are 1, 2, 3 cycles that are beautifully rhythmic in here. If you look at the dominant one right in here, you could see the trough here and the trough here. If you look at the half cycle right in here, you can see the trough right over there and where they both came down together. When the dominant and that half cycle come together, you get the biggest downside moves. You see that right over there, and you see that right over there. Now, where are we right now? Well, you can see the quarter cycles. They're not quite as easily, but you can see this one is perfect right there. This one a little hard to read because it was only a brief upside move. We call this a left-hand translation, and then down. Here's your quarter cycle here, your quarter cycle here. Gorgeous, right? Here's your quarter cycle. This looks like it may have peaked, but we don't have momentum turning over yet. We're just getting a bit of a warning in here as you had this engulfing right there and then beginning to turn to the downside. So you could see while the S&P 500 and the NASDAQ, here's your NASDAQ making higher highs right over there, you could see the Russell underperforming right there. That is significant when you see that underperformance. But here is the worst part of it at all. I'm going to go to the daily chart and look at this. We have now established that the slim cloud is now moving to the downside. This to me, like DJV asked me early on, what is it about your intuitive sense that says that, there's something going on that is fighting the upside momentum of the broad market of those indexes? It's this. And the fact that you get a day like today where the S&P 500 is up 15 points right now, the NASDAQ is up after being weak, but you have a significant negative breadth in the market today. So this is a warning to me. And you can see in here where this was positive, but now it's hard to see. This is now yellow here on the option bias study. So this is turned neutral right over here. And when I look at the momentum now has turned negative on the daily, as you could see right there. So this is all important. You have this downward turn in the weekly. You have this, but that's unconfirmed. You have it on the daily that's telling you there's trouble in the weekly because it wouldn't break down like this unless there was a downturn going on in the longer term timeframes. Now, this is the last high of this cycle right over here at 2088.15. If it got above there, actually there's a 78.6 I don't have in here. That would be the warnings to me that, this is really extended to the right side and the buyers are coming back in and breadth is expanding. That to me is a low probability. So we had a bullish cloud in here before. On 6-4 it was removed because of the breakdown we were seeing. On 6-7, which is today, we added the negative cloud in here, which points to the downside. So this is that warning. You have this condition right over here where you have the slim ribbon PO turning red right over there on the bottom, and the lower tiers of the market are saying that they're not around right now to support this upside move. Can NVIDIA and Microsoft and those kind of stocks continue to drive the market to the upside? It's doubtful. There's going to be something that changes in there. So this is important information in my opinion. Now here is the market condition indicator, and that has now crossed. This is the test where it gets into the plus 25. And when it gets through the minus 25, it's negative. What it's saying to you is that the longer term conditions are starting to no longer give support on the upside, and if anything, are giving support to the move on the downside. Negative momentum here, as you can see, and that is a look at what I think is the first sign of deteriorating conditions in this market. Now, one other thing that I want to look at in here, as I go back to these charts over here, is the MDY, and the MDY is the mid cap index. And here's our cycle in cycles in here, and Arvi did a great job updating this. And we're starting to get a downward turn and negative momentum right over here in the mid caps. This is the RUT cycle, the RUT right there, where it's starting to break down and come down. This is matching that right in here. This is another warning to me that there is a decline ahead in the stock market because it's not supported by enough stocks. And if anything, this downward turn says, well, there's likely to be a move down here from somewhere soon, maybe next week, into the early part of July, just on the short term. And then we have to see what's going on right over here. Momentum in here, as you can see, has now turned negative right there, as the reversal scout has turned down on the weekly chart. And that is a sign that this cycle right over here has made a double top and will not move up into these areas right here. Right now, this is a negative warning. You can see the cycle shapes as Arvi has in here beautifully. And this one making this double top and then turning down here. There's reason to believe that this is something negative to look at, and that is important. I'm going to switch over to the market condition monitor, the MCM, and our new pro version is going to be launched next week, which will allow you great ability to be notified when these things begin to change. You can see right in here what's going on is that the S&P 500 and the NASDAQ have both been very bullish here on the short term. So if you're a short-term trader, that's how I have it set up. But you can see in here the IWM turning slightly bearish, the Dow at neutral right in here. And that is showing you that there's this deterioration in the conditions. Our algorithms are built in here, and that is telling you that there are things changing. If you were really a shorter term trader, let's say a swing trader, intraday or over a few days, you'd look at the near term and you could see very bullish, very bullish. Look at the IWM, very bearish. The Dow here in the short term, though, is still holding at bullish. So let's just take a look at really quickly on the short term some of the other trade setup conditions in other groups. We'll just look at the top ones in here that are very bullish, and you can see India, XLV, XLP, IBB, Applied Materials, and of course SPY sitting at very bullish. If I switch to very bearish, you can see LIT, Wynn Resorts, COPX, Home Depot is bearish, Jets is bearish, Abito is bearish. Wow, that's interesting. And EWW, the Mexican market there. So you get an idea. You can just scroll through here and get a good sense for the conditions of the market. And right now we're looking at still bullish conditions in the S&P 500 and the NASDAQ and the IWM switching over to the bearish right now. And this is just another way to read the same thing that I've been sharing with you, that the market is starting to give a sign that this upside is not going to be able to go a whole lot further. A lot of resistance up above, and also a pretty good sign that the breadth that's necessary to keep the market going is not showing up. And contrary to that, it's actually getting worse. So that is a look at my analysis for the stock market. I want to make sure that you have the opportunity to try out our level 4. The special is only for the next week now. $99 for the first month. It's non-recurring. So you sign up for it, you'll be able to see basically everything that we that we put out there. You know, like there's 1,000 videos in there. I mean, there's so much for you to learn. There's almost 300 evergreen videos of things that I've taught over the last 9 years that you'll be able to watch there. It's just unbelievable. Click the Learn More button at the top of askSlim.com, and you'll be able to get all that information. Everything in levels 1, 2, 3, and 4 is all there for you. The only thing you don't really get with that is our day trader service, which is a separate service. But you will absolutely see everything other than that we do. $99, non-recurring. Try it. It's going to not renew. And if you want to stay, you'll be offered another special. So that's your opportunity in there. And start learning from our team of pros. It's incredible what we bring with almost 100 years of experience between us. Of course, I have 50 of those. These guys are certainly not a slouch, guys and gals, because they're all great. So that's how you can begin to learn from us. I'm tired, guys. You got anything left?
Wow, Slim, that was really comprehensive. Great work. Great work,
Excellent job.
Harvey.
Yeah.
Same with you, Matt. Slim, that was awesome. Thank you so much for everybody
Thanks.
joining us.
Thanks.
Yeah, thanks for
Appreciate
joining,
that.
everybody. Great questions.
All right, so
See you
we'll
again
go
soon.
live in a couple weeks. So
Yep.
we'll see you next week as far as askSlim Market Week Live goes. Market
All right.
Week goes. Bye.
Bye-bye.
Bye-bye.